Hi guys, I'm Manisha Gupta and the spotlight this time around is on gold prices which have declined 6% in the international markets, 4% in the Indian markets, and the previous week has been the worst in the last 15 months. That's the kind of sharp decline that we saw in gold prices. Well, the reason you saw some cushioning in Indian prices was because the Indian rupee also depreciated by more than a percentage point in the previous week. That is the reason you had that mismatch in the international and the Indian gold prices. Not just that, the silver prices also fell by between 6 to 7% in India and the international markets as well. Well, if you look at the gold prices, we are down by nearly 18% now from its all-time highs that the gold prices saw in 2020. Well, gold was the first one to start reacting to the international uncertainties, the weakness in US dollar and the COVID uncertainties. But since then, we have seen the money rotate in various other asset classes, commodities, equities, etc. and is the reason that the gold prices have been volatile, but we've seen interest continue in gold from time to time. I want to first of all start with the reasons that we have seen in case of decline for the gold prices. Well, you have seen the US dollar, which is trading at a 10-week highs now. That has been one of the major reasons. And then the US Fed Reserve started talking about increase in interest rates, bringing it forward from 2024 to 2023. The US Fed also will start looking at the data to start tapering the monthly asset buying, which happens currently at $120 billion per month there. Also, it has been about gold's inability to hold above $1,900 per ounce on charts. That led to some profit taking. We've seen the speculative long positions also continue to unwind in their longs in case of gold, as has been the case with other metals also. That also weighed on. And then the investors are allocating money on various other asset classes, and cryptocurrencies is one of them as well. So various reasons on why you haven't seen the gold prices continue to hold strong. But what the markets will want to watch for this week is going to be China. We've already seen that meeting come in today, where they have kept their prime lending rate steady at 3.85%. But after the US Fed statements and meeting, the major focus is going to be on the Bank of England and the European Central Bank meeting that happens on Thursday. So while there is so much to watch out for, but there still are some reasons that could be supporting gold prices. They are the physical gold buying that we've seen happen in China and India. The global central banks have continued to buy gold as it declines, and so have the investors in gold ETFs. The COVID-19 uncertainty is still on. We've seen cases come back in Singapore, UK, the double variants in US. So whether are we out of it? Is the world going to be COVID free by the end of this year is a question mark. And if not, then those uncertainties would still be there, and you will see the gold prices take support. And then the lower treasury yields, the taper tantrums, and the US dollar moves are some of the reasons that the markets will keep an eye on. So amidst all of this, how should your stance be on gold? In case you want to buy gold, what should you be looking at? Well, first of all, you should be looking at all the uncertainties that the markets are watching out right now, and then you should keep an eye on the prices also. I'll give you a sense on what the markets believe that the prices are moving as. To start with, we've seen very sharp decline, as I told you, from an all-time high of $2,058 per ounce in the last year. We are holding around at 1750, 1760 kind of levels. Market believes that these are the March lows, the 1750 kinds. So we should be looking at strong support here. If this also breaks, then $1720 per ounce on the lower side could be an immediate support. Not too many analysts believe that the prices will break that. So when you look at the Indian terms, that works out to 46,000, 40,000, 45,500, and then 45,000. Given the fact on how we are looking at the international markets, that actually works out to nearly 3 to 4% of a decline from here on. That is your risk on the lower side. When you talk about rewards, well, we have seen that breakdown on charts also. So on the higher side, we are looking at something like 1775 and then 1850 on the higher side. In the Indian markets, that works out to around 48,500 to 49,000 on the higher side. So this is an immediate range that you might be looking at in case of gold prices. But major Wall Street bankers believe that while yes, they also have revised their gold targets on slightly lower side, but they feel that this is not a reversal, this is a healthy correction. These are buying opportunities, and you could be looking at higher gold prices before we end this year. I'm just going to take you through some of the banks here. Citi, for one, says that $1,700 to $1,900 per ounce is what they're looking for in gold prices for this year. Now, 1,900 in the Indian markets would basically come around 4950, 50,000 kind of levels. LBMA did a big survey, and their average for this year now is at $1,973 per ounce. So we have still scope of going higher from here. Goldman Sachs is sticking to its $2,000 per ounce of a forecast by end of this year, and so is Metal Focus. They do not believe all-time highs coming back in case of gold, but $2,000 per ounce is a level that most people still believe that we could be looking at by before the end of this year. Obviously, the next 12-month forecast for many of these banks and broking houses is still on the higher side. But for the near term, if you were to buy gold today at 46,000, 47,000 kind of levels, then you are looking at gains up to 49,500 to 50,000. The 12-month scenario is still on the higher side, where people believe that 52, 54,000 could be coming back. But for that, the wait has just gotten slightly more longer now. So as of now, that is the risk and reward, as I told you, in case of gold. So if you were a buyer, you still have a chance that you could be looking at further profits coming in.